Hello, good day. As we are closer and closer to the next price action movement, both in US and Hang Seng, I'm not taking any big position for time being. For those who have watched many of my videos before, thank you so much. I hope you learned something new and useful from them. For those who are new to my channel, please take the time to look into my past video, look in those areas that I have shared, subscribe to my channel and hit the notification bell so that you won't miss my future video. You can also glance through the video to have a feel of my trading and investment style. So a quick recap. Starting from the left, I have been mentioned that I have been waiting for QQQ and Hang Seng to provide their next price action, and probably that will be in around mid of September. So if you look into the QQQ, you can also see in the previous video, I'm talking about more volatility to come, and it will have just formed two of the ZZ movement. Meanwhile, while waiting for price action until mid on to third week of September, dividend strategy for my existing medium-term stock is still ongoing. A small lottery option to hone my skill sets. So let's look into QQQ chart. For QQQ itself, do watch out for the support position. I believe it will be moving a ZZ position for a few more days before it decides how it's going to move. This can be a good time to pick up one of the US-based growth stock. Growth stocks are often associated with high risk and high reward, as they can generate a significant return. For example, some of the growth stocks are Tesla, Netflix, and Shopify. So if you have some growth stock in mind, please do share with me in the comment section. So do watch out for this position as a support. So next, looking into the Hang Seng. As you go into the Hang Seng, you can see that it's in this box region as well. I'm expecting that it will go out of this box region somewhere around October Q4 of this year. So I will position myself in one of the Asia growth stock in the next few weeks as well. As for Alibaba, it breached below the second block range that was seen. It breached below the $90, 16th of August, and it returned above $90 on 28th of August. Therefore, the strategy that I'm using is continue to sell both call and the put option to collect dividend. So on 20 August, my strategy was a sell call option strategy for bots formation to be firm. And today we are going into September first week. So now I will sell more option with an intent to buy option when the implied volatility have dropped below a certain level as well. I'll be looking for whether the Alibaba price can hold above this support level for the next 2 weeks. And now let's look into some of the instant noodle and buffet dividend as well. So on Alibaba, I've been selling put option early August. So that's $340, credit about $300, and sell two call option at $52. The credit is about $100. So in the medium term holding of this stock, which I'm holding, the credit for this week is about $430. I've done some option on M-Face as well. Rose tries to collect a credit of $216 and sell the put option at 542, buy back at 345, credit about 406. So in summary, short-term selling, trading is about 15 to 20% of my portfolio. Whenever a profit is made, I will channel to my medium-term investment. Second of all, I will see that for the QQQ and Hang Seng, at this point of time, I will not be doing any aggressive big position. And of course, if there's any good potential in earning call, I'll be doing a little bit of the small lottery position as well. So before I go into the end of this video, I would like to share with you also on some of the news about 3 weeks ago talking about Alibaba. In fact, when the news was out, Alibaba do have a share price to have a surge until above 100. But once the news was out for a while, the price went down below $90.
In particular, is starting today in Japan. Investors are concerned about potential sort of a sanction against China and against Chinese companies. But that aside, we think the Alibaba numbers are fine. Emily unpacked the numbers very well for us. But like she said, the most important thing is really this audacious endeavor for Alibaba management to split the company 6 different ways. We think that's going to unlock tremendous amount of value, and hopefully investors in Alibaba will
Not
reap
easy to split into 6
significant
company.
reward in the
So
next
that
couple
will
of
be
years.
quite a long
So if
journey.
you say that this cloud spin-off is a good strategic move to unlock a tremendous amount of value, can you quantify that? What will it do to the shares? Where do you see them heading?
Right. The cloud business is really the crown jewel within Alibaba outside of the e-commerce space. To give you some numbers around this business, it's going to be doing about $13 billion revenue this fiscal year. It's a number one cloud provider in China and number 3 in the world. But more importantly than any of this, in our view at Barclays, is that this revolution driven by the generative AI, the large language model, that's going to change everything. It's going to change what you do. It's going to change what we do. It may even change the humanity at its root. So Alibaba is one of the leading players in China. They just launched their large language model last month. And I think they are one of the, again, like I said, they're one of the leading players because they've been working on AI for several years now. They also have very unique set of data. So if they can execute on that vision and execute on that plan, the value for Ali Cloud could be easily in the north of $100 billion 2-3 years down the road.
So in short, previously before I used the option, I used to trade very heavily into equity because I don't know how to do the option. As I embark on the self-learning journey of learning the option, I start to work on buying a call and selling option as well, which is less riskier than buying the stock because option give you the right but not the obligation to actually exercise within a specified period of time. This means that you can limit your downside risk by paying a relative small premium upfront while still benefiting from the potential upside or downside of the underlying stock. For example, on the Nivea stock itself, I was looking at 330 put price. I was looking into semicon that may have a downside, but I don't need to really buy the semiconductor stock or sell short on the semiconductor stock. For this, I can buy a put on the semiconductor stock at $21. And because when the price action doesn't move according to what I'm looking at, I sell it back at $26, making about $3 out of $20, which is not bad as well. So, alright, thank you for watching, and I will see you in the next video. Do subscribe and take care while you're trading for the next 2 weeks. Bye bye.